Hello dear traders, I'm Anna Kasatkina and you're watching the weekly review of Forex and stock markets from InstaForexs. The uprise of the US stock indices in May was the strongest since February of 2014. S&P 500 and Dow Jones Industrial Average finished that month at record levels. On Friday, S&P closed 0.2% higher at 1,923.57 points. It notched a weekly gain of 1.2% and its monthly growth was 2.1%. Dow Jones rose by 0.1% to 16,717.17 points. The stock index of 30 blue-chip publicly traded U.S. companies ticked up by 0.7% over the week and 0.8% on month. In its turn, Nasdaq Composite tumbled by 0.1% to 4,242.62 points. Nevertheless, the index inched up by 1.4% during the last week and 3.1% in May. Christina Hooper, an investment strategist at Allianz Global Investors, said that the caution of stock traders on Friday was explained by a low yield of 10-year US T-bills. The yield below 2.5% upset investors, as this is usually a symptom of a weakening economy. And yet experts believe there are plenty of other reasons for such dynamics, such as the muted supply and higher attractiveness as compared to other obligations. According to analysts, the situation on the stock market will remain favorable as rates and inflation are low. The markets took into account the news about the quantitative easing tapering, so now all eyes are on the Fed's benchmark rate. The U.S. consumer spending fell by 0.1% in April, and this was the first decline over the year. However, the personal consumption index, the most significant indicator published by the Federal Reserve, hit the highest level since November of 2012. In addition, the mood of American consumers improved to 81.9 points in late May versus 81.8 points at the beginning of the month. This information was unveiled by Thomson Reuters and the University of Michigan. By the way, economists had expected the indicator to stand at 82.9 points. Let us now review the companies whose shares showed the strongest trading. First comes Big Lots Incorporated. The quote of its stock soared by 13% after the company posted the strong earnings results in its first quarter report. The figures ran over the forecasts. The expected earnings are now seen at $2.35 to $2.50 per share. Meanwhile, previously the earnings per share were projected to be $2.25 to $2.45. As for the companies affected by a downward trend, Infoblox Incorporated is worth attention. The papers of this technology company plunged by 37% on the news that its CEO Robert Thomas has decided to step down. Moreover, the financial results of the corporation for the first quarter proved to be poorer than predicted. It should also be noted that last week European stocks extended the rally that started 7 weeks ago. At the same time, the Asian stocks closed mainly negative. This concludes the latest weekly review of Forex and stock markets prepared for you by our InstaForexs team. See you next week. Bye.